Ladies and gentlemen, Matthews here from Forex Traders. I'm here with a trade forecast on gold right here. 1 to 31 risk reward ratio, risk in 34 pips and the target of 1090 pips. Alright, sit around and watch the rest of the video because I'm going to share to you guys what made me come to this particular decision. Alright, so without wasting much of your time, let's jump into right now. Alright, so let's start from the higher time frame. As always, let's go to the daily time frame and see what is happening on the daily time frame. Great. So let's zoom out and all the way. So the first thing that you always have to do is find out what is the overall direction of this particular market. So it's very clear that the overall direction of gold has been to the upside for the longest time. All right. Then you mark the significant high and the significant low, and you can see that the market is within this level right here. So what can we see? All right, the market came and made this low, right? And it went ahead and made this high, came and made a low, and then it has just made another high. You can see that this high is higher than this high. Therefore, this is a higher high. All right, so right now we are coming for a retracement and for a potential move to the upside. All right, so that's where we are right now. We've established that our bias is bullish, so it's really important for us to do that. So right now we're expecting the market to make another low so that we can actually go and break this higher high which was created right here. So from here to here, we have to look for a potential area that the market is going to hold. So I'm looking at there's only this level right here and another level below right there. So these are the two areas where the market is going to react from, right? So for now, my main interest is this until this is broken. So what I have to do is that I have to go to a lower time frame, find my order block. So before we can do that, we can clearly see that right here we had a low and push to the upside. So we had a drop, base, and a rally which broke structure, really important. And then we saw the market continually broke structure until we broke this high right here. So you can see that the high was broken by that sharp candle there, and you saw the market now going to the downside. Really important. So that right here we have our drop, base, rally. Okay, so and the break of structure right here, and then we have areas which are potential liquidity area like this level right here. So I'm anticipating the market to come and test this level, push maybe a bit to the upside, and before it can come finally into this area, before we can see market pushing to the upside. And that's what I'm anticipating. All right, so let's go even further. I show you how I was able to find my order block. I think it was in the 3 minutes time frame. Let me go to the 3 minutes time frame and show you my order block. Remember, so an order block in a bullish scenario is the last bullish candle before the bearish move. That's the opposite, right? So the last candle, the last bearish candle before the bullish move is our order block right here. So let's see what is happening there. So you're going to realize that we're able to actually get that candle, that group of candles right there. That's our order block, and that was like 34 pips. And now we just wait for the market to pull back into that area and see how the market reacts. Guys, remember, these are forecasts. The reason why I don't use pending orders is precisely the same reason, right? So no one knows where the market is going to go at the end of the day. However, what we do is we just anticipate, right? So right here, I'm just going to set an alert. And once the market comes here, I'm going to put an alert, and I'll be told when the market comes to my area. And depending on how the market is presenting, I'll either take a trade or ignore the trade. That's what I'm going to do. All right. If you put pending orders, you just take a loss unnecessarily. So very important. Set alerts and then see how the market approaches, and then you can decide whether to enter or not. All right. So don't just do any others do that. So if you do that successfully, then who am I to judge you, right? So, however, according to my experience, this has worked better for me. It has prevented me from taking unnecessary losses. There's nothing such as a perfect trade where it's going to work every time now. So always remember that. All right, so you can see that our stop loss is about 34 pips, and our target is 1090 pips right here. And yeah, the market usually can actually move like this. Gold is crazy, guys. Gold is crazy. So let's see how this is going to actually perform as the market opens later on today. Otherwise, this looks amazing because we're trading in the direction of the market, and we saw the market making a high, a low, higher high, and now we just broke that high right there, and then we'll see how this is going to actually turn out. Otherwise, I'm excited to see what happens right here. All right, so make sure you check out the first link in the description if you'd like to be able to join us in our M&F Mastery course and community. Remember, right now we are running a 30% off all our services. So if you're interested in our mentorship program or our signals, check the first link in the description. Mentorship right now is running at $175 instead of you paying $250. And if you want signals, you can only pay $35 per month instead of you paying $50. All right. So make sure you check the first link in the description and get yourself that particular mentorship program that will change your life. All right, you guys, I hope you found value. If you did, make sure to subscribe, like the video, comment it in the comment section, hit that bell notification so that you get to be notified every time we drop new videos. Until next time, goodbye.